Are you tired of checking your investment account every week only to see nothing? What if I told you there's a way to wake up every Monday with fresh cash in your account, 52 times a year, like clockwork? I'm going to show you how I built a weekly dividend system using just 12 stocks, and how you can copy it today. First, realty income. O. Let's kick it off with what I call the OG of monthly dividends, realty income, aka the monthly dividend company. I love this one because it's not just hype. They've raised their dividend 118 times since 1994. That's consistency. They own over 12,000 properties, leased to recession-proof giants like Walgreens and 7-Eleven. Triple net leases, 98% occupancy, and a 5.7% yield. I don't have to worry whether rent's getting paid. A $10,000 investment in realty income gives me around $570 per year, which lands in my account every single month without fail. That's about $47.50 per month, and I didn't have to sell a single share. It's my rock. In any market, bull or bear, I sleep well knowing this income stream is solid. This is where my journey began, and it's still the foundation of my weekly income system. 2. Verizon Communications, VZ. Verizon isn't just in your pocket, it should be in your portfolio too. I added it because it offers a hefty 6.9% dividend yield, and they've raised their dividend for 17 straight years. The company has massive infrastructure and a near monopoly when it comes to U.S. telecom networks. Their market position isn't going anywhere, and that's exactly what I want in a dividend payer. Predictability. The cash flow is stable, and their capital investment in 5G means they're also preparing for the future. I like businesses that don't just cling to past glory but evolve. My $10,000 stake here brings in around $690 every year, and those payments land quarterly. Plus, they tend to increase their dividend by about 2% annually. Not earth-shattering growth, but enough to outpace inflation and keep the income rising. It's boring, it's reliable, and in a dividend portfolio, boring is beautiful. 3 Stag Industrial Stag. Next up is my personal favorite REIT for the e-commerce era, Stag Industrial. I call this one my Amazon landlord because it owns hundreds of warehouses, shipping hubs, and industrial properties across 41 states. The beauty of Stag is it pays monthly and yields around 4.8%. But what really excites me is the demand. As online shopping explodes, so does the need for industrial space. These guys are growing rents at 7 to 10% when leases renew, and warehouse space demand is up 15%. That's cash flow plus capital appreciation, a rare combo in REITs. My $10,000 in Stag gives me $480 per year in dividends, which hits my account monthly. But the upside? As e-commerce scales and Stag's footprint expands, that income could grow much faster than inflation. Monthly paychecks, rising rents, long-term contracts, that's the kind of quiet powerhouse I want in my portfolio. 4. Johnson & Johnson, J&J. You want royalty? J&J is dividend royalty, 60 consecutive years of dividend increases. This isn't just a company, it's a fortress. After spinning off their consumer health business, they're laser-focused on high-margin segments, pharmaceuticals and medical devices. Over 75% of their sales come from category-dominating products. Combine that with a $15 billion annual R&D budget, and you've got a business that keeps innovating while staying rock solid. Their 3.1% dividend yield may seem modest, but don't sleep on it. My $10,000 investment started with $310 in annual dividends, but because J&J grows their dividend 6% annually, that'll rise to over $550 within 10 years, all without reinvesting or adding another dollar. This is the kind of compounding people forget when chasing high yields. J&J is the quiet compounding engine in my portfolio, and it pulls more weight than people realize. 5. Microsoft, MSFT. Yes, Microsoft. Not exactly a dividend stock in most people's eyes, but that's what makes it genius. It gives me the best of both worlds, reliable income and insane growth. Their current yield is around 0.8%, which gives me $80 per year on a $10,000 investment. That's not much, but they've raised their dividend for 12 consecutive years, and at a 10% plus annual clip. Meanwhile, the stock has grown over 380% in the past decade. Microsoft is dominating in cloud, Azure, software, Office 365, and gaming, Xbox, with cash reserves topping $100 billion. That means they can boost dividends, make smart acquisitions, and grow earnings, all at once. For me, Microsoft is the growth accelerator inside a mostly income-focused portfolio. It doesn't pay monthly or even a massive quarterly amount, but it balances my higher yield picks with long-term compounding power. 6. LyondellBasell Industries, LYB. This one doesn't make headlines, but it makes me money. LyondellBasell is one of the largest chemical companies in the world, with a solid 5.3% yield and 12 years of consistent dividend increases. They're massive in plastic production, and they're also pushing hard into recycling and sustainable materials, an edge for the future. What I love here is their resilience. Chemicals are cyclical, but LYB's product diversity keeps them steady in any climate. Their payout ratio is under 50%, which is very healthy, even during down cycles. My $10,000 investment here pays $530 annually, and they've never missed a beat, even when others slash payouts. This stock is all about cash flow strength, strategic innovation, and dividend durability. It's not sexy, but LYB quietly deposits cash into my account every quarter, and that's the kind of quiet I can get used to. 7. Main Street Capital, MAIN. Main Street Capital is where I go when I want to back America's small businesses and get paid monthly for it. Main offers a juicy 6.4% yield and acts like a private equity firm for small and mid-sized companies. They lend capital, take equity, and actively manage their portfolio. This hybrid model means they earn both interest income and growth upside. It's more hands-on, which is why their expense ratio is slightly higher at 0.38%. But I'm happy to pay it, because the results speak. A $10,000 stake here brings in around $640 per year, monthly. That's over $50 a month in pure passive income. Main holds 180 plus businesses in its portfolio, giving me instant diversification across multiple industries. When I think about entrepreneurial spirit, cash flow, and reliable income, Main Street is my play. 8. Coca-Cola, KO. Coca-Cola is what I call a forever stock. You could have owned it in 1980 or own it today, and it still prints money. They've raised their dividend for 61 years straight and offer a respectable 3.2% yield. A $10,000 investment gives me $320 a year. But here's the real magic. Consistent 5 to 6% dividend growth, year after year. It doubles your income over time, quietly. KO's global dominance, unmatched distribution, and marketing machine ensure their spot in the consumer world, even as they shift toward low sugar and functional drinks. I don't care if there's a recession, inflation, or Martian invasion, Coke will sell. This is the anchor that keeps my portfolio stable when everything else feels shaky. 9. Enterprise Products Partners, EPD. Now let's talk about what I call America's energy toll road, Enterprise Products Partners. This isn't some risky oil play, it's infrastructure. Pipes, processing plants, terminals, stuff that moves gas and oil across the country and charges a fee every time. Their fee-based model means they're not gambling on oil prices. That's why I love them. They've raised their dividend for 25 straight years and currently offer a fat 7.6% yield. My $10,000 investment earns me $760 annually. That's massive. And because their pipelines last decades and require minimal upkeep, they keep overhead low and profits consistent. If I'm building a portfolio for steady income, I want cash flows that aren't tied to Wall Street mood swings. EPD gives me exactly that: reliable, high-yield, low-drama income. When people zig toward trendy tech stocks, I zag toward toll roads that pay me for existing. Patav the Digital Realty Trust, DLR. The next one on my list is what I call my digital landlord. Digital Realty owns data centers, the physical backbone of the internet, cloud, and AI. They've got over 300 centers across 25 plus countries, serving tech giants you've definitely heard of. They offer a strong 3.7% yield and have increased their dividend for 18 consecutive years. This is where the digital revolution meets real estate. Global data traffic is expected to grow 35% a year through 2030. That means DLR's properties become more valuable over time, just by sitting there and doing what they already do. My $10,000 in DLR gives me $370 a year, paid quarterly. But what I'm really investing in is the infrastructure of the future. With demand exploding for cloud services and AI computing power, I'm confident DLR will be writing me checks for decades to come. 11th, Prudential Financial, PRU. Next, let's bring in some financial strength. Prudential is my reliable anchor in the finance sector, offering a 5% dividend yield and a long track record of steady growth. They've raised their dividend for 14 consecutive years and manage a diversified business: insurance, investment management, and retirement services. I love them because they're not flashy, they're dependable, and in a stormy market, that's gold. A $10,000 investment in Prudential gives me about $500 per year, and they've historically grown dividends at 5 to 7% annually. That means I'm not just collecting income, I'm getting raises while I sleep. Their low 0.17% expense ratio is just icing on the cake. Whenever the market looks shaky, I look at Prudential and think, yep, we're good. 12th, AGNC Investment Corp, AGNC. And finally, the star of the show, AGNC. This one pays me monthly, has a crazy high yield of 9.8%, and gives my income strategy the firepower it needs. AGNC invests in mortgage-backed securities that are backed by U.S. government agencies. So even though the yield is high, it's not some reckless gamble. It's backed by Fannie Mae and Freddie Mac guarantees. My $10,000 investment here earns about $980 annually, split into 12 payments of around $81. That's money hitting my account every single month like clockwork. What takes most investors $30,000 in an S&P 500 index fund to earn, I get with a third of the capital through AGNC. This is the final piece of my weekly dividend puzzle, and without it, the whole thing doesn't hum the way I like it. Now, how does this all come together into a weekly dividend machine? I've categorized each stock by their payment schedule. Some pay monthly: Realty Income, Stag, Main Street Capital, and AGNC. These are my baseline, 4 checks every single month. Then I've got the quarterly payers, split into 3 groups. Group 1, January, April, July, October. Week 1, Verizon. Week 2, Johnson & Johnson. Week 3, Microsoft. Group 2, February, May, August, November. Week 1, Coca-Cola. Week 2, Digital Realty. Group 3, March, June, September, December. Week 1, Enterprise Products. Week 2, LyondellBasell. Week 3, Prudential. When you lay this out on a calendar, there's at least one dividend payout scheduled for every week of the year. That means 52 weeks of income. No gaps, no dry spells. Every Monday I open my account and see cash waiting for me. This isn't fantasy. This is how I built a system that pays me to exist. If you want this same calendar, mapped out with exact payout weeks and stocks, download the free PDF in the description below. Use it as your blueprint to build your own weekly income stream. You don't need to be a millionaire. You just need to be intentional. Start with what you have, stack reliable dividends, and watch your Mondays change forever.